Currently, I'm a business relationship manager, we're called here, and I work for National Bank. And as a business relationship manager, what my primary responsibilities are is to maintain a current portfolio that we do have and are assigned to, and we're to make sure that we help them with their financial needs. We help them anywhere from credit to, which I, by the way, have an emphasis on, is in the credit. Business credit is one of those things that when you want to go out and take on a vendor or a supplier or a lender, that is a means or a measure that they have to say, are you a good risk? You have proven yourself that you pay your bills on time, that you hit your net 30 doing payables. It just shows your integrity and your track record, and that is something that we can use as a scale per se to know, are we willing to work with you as a customer, as a lender, or whatever the situation may be. The way you obtain business credit is, the thing I want to really emphasize on that question is you really need to do it one step at a time. This is something that does not happen overnight. It takes a long process, but you just kind of got to take it baby steps per se, if I can put it that way. The best thing you can do, of course, is to find a lender that you like working with and build a relationship with that lender, and then pay your obligations on time. Another thing I'd probably recommend in establishing credit, there's what we call Dun & Bradstreet, that a lot of your lenders, suppliers, they all use this service, and it's been around, I think, since like 1840s. It's like a global company that provides business information for folks that do business, and it's information they provide to the lenders. They provide business to business suppliers, and it allows them to see, how is this business doing? Do they pay their bills? Are they a good risk? And those are just some good ways that you can establish your credit. But just be patient. It takes time. It doesn't happen overnight. What we look for as a banker, when I have somebody come in looking for credit from us, there's usually about 5 areas we like to look at, and it's called the 5 C's of credit. And this would apply with really any type of loan that you're looking for. The first one would be cash. Of course, the lender's looking, do you have adequate cash for what you're looking at doing? The second one would be capacity. Can this business repay the loan? The third one would be collateral. How am I going to secure this loan? And of course, the more dollars you're trying to borrow, they're going to be looking for collateral so that they're protected. The fourth thing would be character. Character means, what is this business's background? How long have they been in business? Have they paid their bills on time? What type of a business are they in? What are the characteristics of this type of business? And then the last thing would be credit. And we've kind of previously talked about credit. But credit is one of those measures of, do they pay their bills on time, their lenders, their suppliers? And credit is, kind of the all-inclusive last thing we look at there to just say, hey, is this a good credit risk? If I was to say what is the single most important thing to look for when you're looking at financing your business, I would say partner up with a very reputable lender. There's a lot of lenders out there, but I would, especially now with the credit situation we're in this country, find a reputable lender that is not here today, gone tomorrow per se, and build a relationship with that lender, and really work hard at building a relationship with your banker, your personal banker, and help them learn your business, help them grow with you so they understand your needs as you go along, as you grow, because that is so important. Because as your business grows, you need to have a partner, and you need that partner to understand what you're trying to do. You hear a lot about what does traditional financing mean in the lending world. What traditional financing is what at that bank level, what do they require to lend out their money? And I would say, lots of your banks, financial lenders, let me put it that way, lenders in general, they like to usually see a 2-year history with companies. Now, that's not saying that you have to have 2 years history, but they do like to see a history that gives you kind of a proven track record to look at, and a 2-year history just seems to give them kind of an ample time to be able to determine that. Well, you really, when you start a business, you got to give them a pat on the back, because anybody that's willing to go in and try to do business for themselves, I mean, that's not an easy thing to try to go into. With a new business or a startup business or one that's been in business less than a year, they're going to have a tougher time because really, like we just talked about, they really don't fit the traditional financing, so they may be a little bit limited on their options. There is and has been in the past, there's options through SBA, which stands for Small Business Administration, which they partner with the bank and will actually insure over part of those loans. And so it makes it so the lenders can be a little more flexible maybe sometimes in some of the guidelines. Maybe a little less down payment per se. Maybe you don't need to be in that business for a full 2 years. But there's so many objectives that they'll look at. They'll go back to the 5 C's of credit we looked at. Do you have the cash? Do you have the cash flow? Do you have the characteristics? The type of business that we're looking at. And then SBA will make that determination to see if they can assist you with that type of lending. If I was to have an entrepreneur walk into my office and say, what piece of advice, Mark, would you give me going into a new business? I would tell them, on a light side, don't plan on taking a lot of vacation days or sick days. It takes a lot of hard work to start your own business. But I would tell them, do it one step at a time. And, I'm a firm believer in the No Free Lunch program. I've been taught that when I was young, and easy come, easy go. If you can bring cash to the table, you hear the phrase, cash is king. If you can have cash, it always helps your situation. And, back to the No Free Lunch program, if you've got some skin in the game per se, it really looks favorable to your lenders. And so, retain those earnings, put them back into your business, and it will really always be favorable for you. And it helps you be profitable, it helps you have the cash you need so that you can have the liquidity you need, and that's what I would probably, say is best advice I could give them. If somebody has no credit history and they're trying to look at other sources besides a traditional bank, some things that are fairly popular is a lot of times sellers are willing to carry the contract. If they have a building, for example, to sell, they're willing to act as the lender, and then they can create their own terms of the loan, their own interest rates, those types of things. And a lot of times those are very valuable for somebody trying to get into a new business where they can actually just pay the seller. Okay, that's one way. Another way a lot of times you'll see folks will do is they really need to rely on their personal assets when they're trying to start a business. Or taking over an existing business but are trying to get the thing going or continue it going here. They need to have cash available, and some things you could do. Home equity loans are a great product. You can pull equity out of your home, great rates. It's secured with your house. A lot of folks will go that direction. Personal credit. A lot of times you'll have personal credit sources. Personal investments. Those are liquid assets that you can pull from to use those monies for business purposes.